With the economy in facing high inflation, the Federal Reserve has begun to raise interest rates. Investors should prepare for a bumpy ride in the months ahead, and so it's crucial that investors stay disciplined. Building a portfolio that has at least some less risky assets can be useful in helping you ride out volatility in the market. The trade off, of course, is that in lowering risk exposure, investors are likely to earn lower returns over the longer run. But if you're looking for growth, consider investing strategies that match your long term goals. Even higher risk investments, such as stocks, have segments that reduce relative risk while still providing attractive long term returns, such as dividend stocks. What to consider depending on how much risk you are willing to take. Now, there are two strategies depending on the risk you are willing to take: no risk and some risk strategies. When you choose no risk strategy, at that time there is no loss of principal. However, with some risk, there is you can reach break even or small loss. However, with some risk strategies, it's reasonable to say that you will either break even or incur a small loss over time. There are, however, two catches. Low risk investments earn lower returns than you could find elsewhere with risk, and inflation can erode the purchasing power of money in low risk investments. Let's have a look at the best low risk investments in 2022. First, high yielding savings account. While not technically an investment, savings account offer a modest return on your money. You will find the highest yielding options by searching online, and you can get a bit more yield if you are willing to check out the rate tables and shop around. Series 1 Savings Bond. It is a low risk bond that adjusts for inflation, helping protect your investment. When inflation rises, the bond's interest rate is adjusted upward. But when inflation falls, the bond's payment falls as well. You can buy the Series 1 bond from treasurydirect.gov, which is operated by the US Department of the Treasury. Short term certificates of deposit. Bank CDs are always loss proof in an FDIC backed account unless you take the money out early. To find the best rates, you will want to shop around online and compare what banks offer. With interest rates already on the rise in 2022, it may take sense to own short term CDs and then reinvest as rates move up. You will want to avoid being locked into below market CDs for too long. An alternative to a short term CD is a no penalty CD, which lets you dodge the typical penalty for early withdrawal. So you can withdraw your money and then move it into a higher paying CD without the usual costs. Next is money market funds. Money market funds are pools of CDs, short term bonds, and other low risk investments grouped together to diversify risk, and are typically sold by brokerage firms and mutual fund companies. Next is treasury bills, notes, bonds, and TIPS, TIPS, Treasury Inflation Protected Securities. The US Treasury also issues treasury bills, treasury notes, treasury bonds, and treasury inflation protected securities, that is TIPS. Next is corporate bonds. Companies also issue bonds which can come in relatively low risk varieties issued by large profitable companies down to very risky ones. The lowest of the low are known as high yielding bonds or junk bonds. Dividend paying stocks. Stocks aren't as safe as cash, savings account, or government debt, but they are generally less risky than high flyers like options or futures. Dividend stocks are considered safer than high growth stocks because they pay cash dividends. Preferred stocks are more like lower grade bonds than common stocks. Still, their values may fluctuate substantially if the market falls or if the interest rates rise. Money market accounts. A money market account may feel much like a savings account, and it offers many of the same benefits, including a debit card and interest payments. And a money market account may require higher minimum deposit than a savings account. And the last is fixed annuities. An annuity is a contract often made with an insurance company that will pay a certain level of income over some time period in exchange for an upfront payment. The annuity can be structured in many ways, such as to pay over a fixed period, such as 20 years or until the death of the client. These are the best low risk investments in 2022. Look at the market has been varying very much. Be safe, avoid bottom fishing, and keep an eye on these best low risk investments as well. Invest well, be financially literate, and take care of your money in a healthy way. Thank you very much and all the best.